All right. Let's see. I discovered here that I had a technical glitch that prevented the email from going out earlier. The glitch was actually there are now so many subscribers for that list that it exceeded the limit that I've got on the email list server. So I had to remove a couple people to get it out now, and then I'll have to come up with a method of distribution that will handle more folks. It's capped at 5,000 and over the past week it went over that number. So I guess that's a good problem in the grand scheme of things, and I'll get that sorted out. I'm also doing the call, later than normal, so I don't think on the call we're going to have the normal level of attendance, but due to that, I am recording it. I've had a lot of people ask me to do that, so we may just have to bite the bullet on that. But certainly for today, I'm recording the call and I'll send a link out to people that didn't make it. And since I was able to just get the email sent out now, I have a feeling that we'll have some folks that'll jump on throughout the call. But I am at an airport getting ready to jump on a flight, so I'm just going to get into it. If we look at this slide here, we can see that relative to the last call that we had, things are better. It was a drop of over 17% when we looked at the year over year for the first half of the month of September. That has now come down to 15.38% when we got the full month in there, which makes it, sort of in line with what we were seeing in the June, July timeframe. I'm still a little disappointed by that because the things that I've seen point to more resiliency in the business travel segment, and September and October are usually pretty strong months for business aviation or, business travel versus leisure. Um, when out talking to people and trying to unpack that, I do believe that the election uncertainty is the number one thing that is driving that. Certainly, the stock market has hit some historic highs. Businesses are doing well. The economy is strong. The real X factor here is, the election and just the fact that it's a toss up. And I think there's some concern there. I've said forever, and if I've said it a million times, I'll say it a million more. I consider the charter market a CEO confidence meter. When the folks that are out there flying privately feel good about tomorrow, or feel certain that they're going to be in a better position than tomorrow, they are pretty bullish and fly more. And when there's some concern there, it's an emotional purchase. They will pull back, and it can happen pretty quickly. Um, so at this point in time, I don't think it's we can jump into the next slide here, but it's trending, back at where we saw it for the rest of the year. August wound up, being, much stronger than I anticipated, and I hope that was going to be um, an indicator that things were going to, continue on that trajectory. But you can see that September came in even weaker than August, which is not normal in terms of a demand pattern. But on a year-over-year basis, like I said, it's not terrible, but it's not the boost that I was hoping for. Here we are in the Part 91 market, and this segment was off more than we'd seen all year. If you look at the year to date, it's 3.5% above last year. We're at less than 1% low, which is better than north of 2% low that we were seeing halfway through the month. So the back half of September was also much stronger for Part 91 flying. And here's what that looks like. So, we came in just below 1% lower than 2023, and we're still tracking about 20%, just, give or take, higher than 2019 when we look at Part 91 flying. When we get to the combined deal, we are at 4.47% below last year and 4.93% above 2019. So when we look at the trends by size class, I put this in the email that I sent, but you can see that we're tracking 20% below last year. So sort of a significant dip in the light jet segment. It's not a surprise to me that the light jets are taking the biggest hit. It's the sort of the bottom of the market. The guys that are, most price sensitive are going to be flying light. Super mids are the the size class that are doing the best, and that's just been a pattern we've seen for quite some time. So you can see here, midsize are not doing quite as poorly as the light jets were. Super mids are doing, darn well under the circumstances. Large cabin is doing slightly less favorably than the super mids. And then we have turboprops that are also kind of off. Going into our major markets set of airports, this is LAX, which happens to be where I am right now, and this is including the airline traffic. Here is LAX GA only, and it's trending right along with its year to date. Here's Van Nuys, which is trending slightly below, so it's a weaker performance for that market. And then looking over at LaGuardia, this trend is what you see at an airport that is predominantly airline. There's almost no GA, to the fact, to the point where we don't even just pull out GA for this airport. But those dips are reductions in the airline schedules for the weekend. And we can see that they did increase schedules a little bit for the month of September. It was up 5.1%, which is better than the 2.7% trend year to date. When we look at other metro airports that do get business aviation traffic, Teterboro being the largest in the nation, you can see that it was a pretty strong month of September, 5.2% above last year. I was thinking we were going to see something closer to this. I mean, I wasn't expecting September to be better than last year. I was expecting it to be a smaller gap to last year and sort of more along the lines of what we're seeing here in Teterboro in terms of much better than the year-to-date trend. When we go to White Plains, we're also seeing a pretty good, strong month. So the Metro New York airports are popular. I think that does point to folks that are, on the road one way or another visiting. Morristown just had some stuff going on here. I'm not exactly sure, what drove that, whether it was construction or something else. I didn't really talk to anybody there to try and understand, but we've had a dip. Here is Chicago Midway. This is including Southwest, all the airline stuff that's in there. When we pull that out, it is off, and Chicago was up as a major metro, but weaker in September by 1.6%. And then here is Chicago Exec, which is the business aviation airport for Chicago Metro, or at least the one that we track, and it's off 3.4%, so weaker than its year-to-date trend. When we go down to Atlanta, this is Atlanta, including all aircraft. I've said this in a few other calls, but this is Delta's day of disaster with the IT outage. And when we pull out the GA, you can see that when people don't have access to the airlines, they do tend to, they did recover some with private. Now, whether that was Delta swooping in and booking some wheels up jets or not, I don't know for sure, but you can see there was a requisite uptick in business aviation traffic out of Atlanta when the airline was struggling there. But for the month of September, we're off 20%, which is significant drop. The other thing to note, though, is that Atlanta Hartsfield is not the biggest GA airport out there. The traffic, even on a good day, isn't that significant. So here's Peachtree, DeKalb, and just look at the numbers. It's materially more traffic is going in and out of there. So the percentage bases have more weight to them, and we're off 6.9%. So Atlanta Metro as a whole was weaker in September. Here is Boston, and this is the chart that includes all the airlines and everything else. Boston is a stronger summer market. We're kind of coming into off season there, but this has been pretty strong. This is including the airlines. When we pull out the airlines, it's actually spiked up quite a bit. So that it's 26.6% above last year, and the year-to-date trend is 16.6% above. So Boston's having a great year. Here is Bedford, and Bedford is off 6.6% month to date. So not quite doing as well as Logan, but still having it's not as bad as the overall market trend. Let's put it that way, but it's not as good as the year-to-date trend there. Here is Reagan. Again, you can tell it's an airport with little or no GA and a lot of airline. just like LaGuardia, we don't bother to pull out the GA here, but you can see that the airlines bumped up a bit for the DC metro area. Here is Dulles with all the traffic. When you get international stuff like at Logan and in Dulles, you can see that it follows a slightly different pattern, um, even for the airline stuff. When you pull out the GA, then it's a completely different story. And Dulles, like Boston and LA, are up month to date 10.9%, which is sort of double the year to date trend. And oh, sorry, I hadn't pulled out the GA. This is without the GA. It's even a little better, up 12.5% and beating the year to date trend. Then here is Manassas, also having a strong month. So the entire DC metro area is doing much better than its year to date trend. You can see here it was off 7.6%. We had quite a spike here. And then here is Charlotte. There's been a significant schedule increase by American, and when we pull that out of the mix, you can see that the GA is flat this year versus last year, and it's just slightly above last year on a year-to-date standpoint. Here is we have a few airports here that we lumped together as second home cities. Hampton is one of those, and the Hamptons is trending 3.7% above same period last year, which is better than their year-to-date trend. And we are definitely coming into the off season there. You can see how things kind of drop right off. Aspen is coming to the end of their summer peak too. This is with the airlines. When I pull out the airlines, off a little bit from last year. Here is Eagle, which is, it's interesting how they follow different trends, even when they're next to each other. I think a lot of that has to do with events. Events drive a lot of traffic to both of these airports. And while the year-to-date trend for Eagle is slightly above break even, or slightly above last year, I should say, month to date is off 2.9%. Now, when we get to Denver, which is really business airport in Colorado, the busiest, it's off 4.6%, so weaker than the year-to-date trend. Nantucket had a fantastic month of September. The weather was nice up there. It's in our backyard, so I've seen it personally, and not quite to the same degree. Martha's Vineyard also had a better than average, but you can see those summer destinations are starting to trail off. Then we go out to Napa, and it's a little bit weaker than the year-to-date trend. And Bandon Dunes is the opposite. It's sort of beating its year-to-date, and it's up 10% for the month. Here is Scottsdale, which generally speaking has been ahead of last year. The way things fell in September, off 1.2%, but you can see it's 5.3% above overall. And then here is Jackson Hole, which has had a very good season this year, up 2.3% for the month, so better than the year-to-date of 1.7. And here is Hilton Head, that also had a good month, coming in 2.1% against year-to-date of 2.5. When we look at other cities, we get into the Dallas market, and Addison in Dallas is up 8.1%. So nice month there versus 2.1% last year. And then here's Dallas Love, including the airlines. Dallas Love without the airlines. So things have gotten a little bit weaker over here at Love. Love has been doing really well and is solidly in I believe, the number 3 slot in terms of busiest airport for business aviation in the U.S. Then we go down to Florida, and here is Opa-locka. The year-to-date trend is just above last year at 0.3%, with a month-to-date trend or a month of September trend of negative 2.5%. Then we look at Fort Lauderdale International, and I've said this on a bunch of other calls. It's interesting how the international and Fort Lauderdale exec follow different patterns when you could kind of throw a stone from one to the other. So this is including the airline traffic. When we pull that out, we are up 8.6% for Fort Lauderdale for the month, which is much better than the year-to-date trend. When we look at Fort Lauderdale exec, it's the opposite, and it's interesting how when one seems to be strong, the other is weaker. Just just curious. Here is Naples, which really had a weak period here. I'm guessing that was a storm, but we're 7% above year to date and off 5.4% for the month. Here's West Palm, 2.2% year to date, 2.9% for the month, but this is including the airlines. When we pull that out, oops, when we pull that out, it turns that around and we're at minus 2.9%, which is still better than the year to date average. And then here is Nassau, which we've added recently, and you can see the year to date is off 0.2% and we're off 8.4%. So the season is over. There is a summer season out there that is kind of we're at the bottom of the year for Nassau right now. So I'm going to just jump to the latest week here. I do keep a few others in the deck. You can see the nice thing here is, having looked at these for years, when things are very strong, the concentration of the top 50 OD pairs gets up close to 1,000. Right now we're at 790. If we look back in August, it was just above 500, which was the weakest I've ever seen it, or least concentrated. So people were just doing completely different, less concentrated flying patterns over the summer than we've seen before. This is much more typical in terms of what we should see. So Las Vegas, Van Nuys, Teterboro, Van Nuys, Van Nuys, Teterboro being all strong makes tons of sense. And we're starting to see the north-south stuff kick in when you're got 25, 24 flights back and forth between Teterboro and Opa-locka. So that's normal this time of year. I'm going to bounce down to most recent week. This was also in the email, but you can see the prices have dropped in most states, all but Iowa and Rhode Island, and those increases weren't big. And then you can see that just as we've seen for quite some time, Colorado and Rhode Island and Alaska, Hawaii to some extent, are the most expensive places to get gas. And the middle of the country here is the least expensive place to get gas, with Oklahoma being the winner if you need to stop. That is the end of the deck. So if anyone has any slide you would like me to, oh, GPI, sure, Shelley. Yeah, I was just going to ask, and I'll say it while I'm pulling it up here. There's an airport that I don't have in the deck you would like to see. I am happy to pull that up. I'm going to do that right now for this. Okay. And if there's one that I went by too fast or whatnot, just let me know. 9:30. I will have to reshare to get that up. So here is GPI. Let's see here. Yeah, you bet, Shelley. For the light to heavy jet slides, is that inclusive both Part 91 and Part 135? David, it's not. That's 135, known 135 flying. The pattern would be different if it was all of those combined. I guess when I look at those, I am taking more of a look at the charter market. If we looked at the Part 91, it was nearly the same as last year. And it does follow a little bit of a different pattern there. Jen, can we pull up BUY? Of course we can. So here you go. Looks like there was some construction there last year. But we're looking at 15.2% above last year. And that the construction, well, it looks like it carried over a little bit. So some of that year-over-year bump is just because that whatever had the airport closed didn't happen at the same time this year. And AVL, okay, we're looking at rescue mission stuff, sure. AVL. you go. So there you have it. And I could extend this a little bit. I have data through I think I've got it through the first. Could add one more day. So yeah, you can see down here the 30th on the first, there's a jump in flights. And obviously the low there was the hurricane day. Let's see. Might have missed it, however, interested in difference in traffic into Boston and Bedford. Boston has been nuts, wondering if more are preferring Boss over Bed. So, Steve, 100%. I can go back. Well, I have them in the deck, but I can go back here. It's remarkable how many aircraft, and I got to pull out the airlines here. It's remarkable how many, the increase in traffic into Logan. I have to back this off, or the month over month is going to look silly because it's only one day. Um, but when you look at this, it's, yeah, 26.6% above last year. I mean, you're just looking at that trend, it's just chugging up. And when we look at Bedford, it's not bad overall, but it's not as strong as that. So what's that? Updates. You can see Bedford's actually down 6.9%. All right. Okay, so there you go, Steve. Jen is saying some of the reason that you're seeing more traffic in Boston is they've taken away the per hour fee, so made it less onerous to keep an aircraft on there overnight. I go in and out of there a bit in the Bonanza, and they don't have a ton of ramp space though. So that, I don't know how many planes they can actually hold overnight. I mean, it seems like they can do 15 or 20 total max. Um, So that's that. I think we watched the news cycle and the emotion around the election here, and I do believe that's tamping things down. It will be interesting to see if we get a boost, either way once that's in the rearview mirror, and maybe it won't happen until we get to inauguration day. But I believe that is having an impact on the market, although it's awfully hard to prove. So that's where we're at. If there are no other questions, I will call it for this week. I am gonna send out a link to this recording. I'm not sure I'm gonna do that forever, but just because of the way the email went out last minute, I'll do that for people that couldn't make it this time. So there it is. Thanks, everybody. Have a great week. We'll talk to you in 2 weeks, and I hope I see you in Vegas at NBAA. We'll be there. Booth.
Thanks, Greg.
Yeah, sure thing. Booth 3201. See you later.